All right, ladies and gentlemen, I hope you had a wonderful day. I got another watch list for you. And if you saw today, it was a wild one. Something pretty unexpected happened, and it was the fact that everything came in line. Like, literally, there was no misses anywhere except for jobless claims, but we didn't really talk about that today. But I am here to tell you, you did not miss the bottom, okay? Let me tell you that one more time. You did not miss the bottom. What I'm trying to tell you is that what happened today, especially what happened in the bond market, the Fed futures, all of that, even though the market moved a lot lower than what everybody was expecting, the bond market went crazy, and the Fed futures are saying that we are going to get 25 basis points. And I know it sounds exciting at first, but let me bring everything in the picture with this one chart right here. And very well, we may see good news become good news and bad news become bad news, or maybe today's good news may turn into bad news, but it's quite simple. What this chart is showing you is why the market went up, but why it may start to change a little bit, especially if everybody is right about inflation. So what you're seeing right here, these are the expectations for the federal funds by February 2023, but I want you to take note of where it is by July, and then the expectations of where CPI will be in July, and then you have the real rate. Pretty much take the Fed funds rate, minus it from the CPI, you are left with the real rate. And after today, I could explain it with a lot, and I'm going to show you that game of chicken, but it's very simple right here. The market in the bonds now, after today, they are pricing in about like 4.9% federal funds rate by July, right? But they are also pricing in that the inflation will be around 2%. So what does this mean for the real rate? If this actually happened and inflation really did keep dropping over the next couple of months and the rate just somewhat stayed here, you would actually be moving into somewhat restrictive or 2% on the real rate by the middle of the year. So hopefully you see what's being said here. It's pretty simple. If the Fed's fund rate is just under 5% by July and the inflation drops to around 2%, you are roughly going to have a real rate of 3%. So take a look where we're at now. Currently, it's about negative 2% real rates. Why? Because the Fed funds is at like 5% and inflation, or below 5%, and inflation is much higher at like 6.5 after today. 4.5 minus 6.5, you're left with negative 2. So this is where it's going to get interesting, and this, we talked about it all day with the bonds, but now this is going to be a big focus, and yeah, we can focus on the CPI and all of that, and you're going to hear a little bit more of it, but now here is the next thing I want to show you. This is the dot plot from the beginning of the year, January 3rd. If you remember the video about the game of chicken, I was showing you this, and this was the Fed futures versus the green line where the Fed dot plot is at. And, well, look what happened after today. Pretty much it moved by almost 1 or 1.5%. Now, by 2024, the Fed futures are pricing in a lower rate, and even by the end of 2023, this terminal rate has even dropped. So right now, after today, the Fed futures are pricing in 25 basis points, but get this, at the next two meetings, the Fed futures are pricing in less than 50 basis points, but the whole point is Powell and everybody on the Fed says, nah, we're going to get to 5. We're not going to cut till next year. And even though the CPI dropped today and the market is up and all of that, well, taking a look at where we're at, the market says, nah, you guys aren't even going to get close. They say in cat, baby. So we have a lot to talk about, and I'm telling you, this is a huge story. And what I just showed you with the real rate, this is going to come up a couple more times now, and it is going to make the rest of this year crazy. Inflation itself, I mean, it wasn't the best report, but it was good enough. And sadly, man, I say this sadly because we're going to have to deal with Powell, because even though everyone's kind of excited, and hopefully you can see it's not like they went too crazy, but that blue line from yesterday, it went up, and Powell is not going to like this. So, Chad, we are going to have to go over a lot. I got some plays for you. You're going to see where my plays stand and all of that, but it's been a wild one. We have earnings kicking off tomorrow, and really, I mean, the market and the fireworks and Powell and everything, it's going to be crazy. But literally, like I just opened it up with, man, you did not miss the bottom, because if everything plays out how people want with inflation, believe it or not, the markets will find their little unique way to get restrictive again. So we will see what happens. But Chad, I got all that. Just like the video. I hope if you learned anything already in this beginning, just show me some love and like the video. If you could drop me a sub too, it works, okay? So if you, I don't know, I got a lot more to talk about anyway, so maybe you could wait. That's fine with me. And Chad, we're going to be there in the morning, youtube.com/the stock market. It's free 99. Shout out to the long term. Run it, baby.
Working to the couch, it's the 2020 election. Live in the hills, but I still get a spread. Started with a live, but I still reinvest it. Feel how I feel, then it feel like a blessing. I just want the lesson, I just want protection. I'm up and I'm down, but they sound like progression. Farmer never plans if he waits for perfection. Finger to the down.
But right off the bat, ladies and gentlemen, today was very simple. The massacre didn't occur with anywhere else, except for the fact that today was the first CPI in almost a year that didn't have a surprise. Like I showed you at the beginning of the video, we were expecting a lot. Even myself personally, I was like, nah, man, headline is going to get plummeted. That was supposed to happen, but the fact is you had zero surprise. Everything came in line, and you haven't seen that happen in a long time. So it was still a good reaction, but 0.6 on the NASDAQ, 0.3 on the S&P 500. I mean, that wasn't what the bonds were pricing in, or excuse me, the options. It wasn't what any of the banks, the analysts, nobody was expecting this to happen, and that's why we kind of got off to a slow start. And even on top of it, right in the morning, and this affected the Fed futures as well too, you even had a Fed Harker, Patrick Harker. He said he favors 25 basis points. That was like right here, 15 minutes after the release, and he is a voting member. But at the end of the day, like, you didn't move beyond where we were at. Again, for all of the CPIs and all of the volatility around CPIs in the last 12 months or longer, this was very unique. That's why I think the follow-on events are going to be important. And now this is something we're talking about, and this is why I brought this up. Yeah, earnings are next, and that's what we're going to deal with, and we got to watch for any Grim Reapers. If there's any, like, huge misses out of tech stocks and people really get worried about the economy and other industries based on the earnings. But for real, this is just all about the bonds now and the game of chicken between where the Fed is at and where the bond market is at. And now, how quickly does either the Fed sledgehammer us back to restrictive, or does it happen naturally and then kind of catch people off guard? But the whole point is the event risk moving forward from here on out, it has increased, and the lack of what we saw today, that is going to carry through. It might try to show itself through earnings, but most likely now we got to be watching out for any of these Fed speakers and Powell, and when does the market listen, if they do listen. And I'm talking about the bond market, but I'm telling you, all of this was very crazy, and everybody was expecting a lot. It still ended up good. Everything expected happened, but now it's kind of playing in a weird fashion, and now that even leads a lot of people are saying, well, do you think it could go higher? Do you think it could go lower? I think it could go as high as it wants or as low as it wants until Powell talks. More likely, assuming the earnings aren't bad, you should be able to keep going up here, but it really depends now. What do these Fed officials say, or is there now anything that can affect the federal funds rate, the next meeting, and anything beyond that? So keep that in mind, and if you do have any questions on this, you could put them below, but come on stream and I'll answer this live. We'll explain it. If you were there today, we were diving deep into it, and shout out to you if you were participating. We had some good questions, baby, so it's always a lot of fun. But quite simply, coming into tomorrow, if those banks don't give us anything bad, like really bad, we should keep melting up. The bad earnings will slow things down, but really what I'm kind of expecting here is that even if there is bad earnings or even if things start to calm down a little bit, you might keep watching the bonds rally. Like we said, there wasn't no surprise. The market didn't move much, 0.6, 0.3. The bond market absolutely killed it, and they were the winner. And I wouldn't be surprised to watch this keep happening now, considering it seems like the bond market is really emboldened with its disagreement with Powell. But we're going to see if the bond market moves a little bit more than equities tomorrow. Again, the other earnings will be a broader factor. Then we're going to get right back into earnings mode on Monday. But like I'm trying to tell you, earnings will be important, but I don't think it's going to be the most important thing. So we will see what happens. But let us get into the plays. So right off the bat, I only got a couple of plays for you. I mean, this first one is amazing, but I'm really only going to be focusing on bonds and those bank earnings when they come out in the morning. I'm sure we're going to get a lot of continuations, and thankfully, the conference calls happen during the day. So we'll see what happens, baby. But play number one. HBI, baby, Haynes brand. This is really just a victory lap for the long term, but I may want to trade this on the trading account tomorrow because maybe it gets a little squeezy. This thing has been outperforming a lot of names to start off the year, even Bitcoin, even though Bitcoin went crazy. That ETH store is killing me, but we're going to see. But they had news after hours. They're getting rid of their CFO or CFO for family reasons. He's resigning, but they raised their guidance. They said their revenue is going on the top end. They said EPS should be on the midpoint to higher. All around just good guidance coming into their earnings next month in February. But I think this might get a little crazy because last time HBI had any earnings of this nature, I think the stock was at like $9 or $10. So I want to see what happens with it. If not, I'm going to just cheer it on for the long term, man. And again, shout out to the long term. We just bought this one at like 10% yield, and it's already now just under 50%. So shout out to that long term. Remember, save 10% before you day trade, before you penny stock, before you future, before you AMC, GameStop, BBBY, anything in between. Just pay yourself 10% and then do whatever else you want with the rest, baby. But gonna be watching that one tomorrow. Shout out to Haynes brand. Then play number two, baby. Beyond the bonds today, the actual real winner, it was the yen. So YCL, I low-key forgot we added this because I remember I have my yen futures, but we bought these on the shares. Remember I was saying buy the dips. I should have bought a little bit more of these, but the yen is still in play and the yen is breaking out again. But now this is like the third or fourth time, so I don't think you should FOMO into the highs and wait for a pullback. But now if it starts breaking these levels, believe it or not, the yen is about to be at those levels at May when we first started to short everything last year, which is pretty wild. And again, you'll see the next play that I'm referencing in it goes hand in hand with it. But let's see how this one plays out on Friday. We've seen a lot from the Bank of Japan on Friday, so I definitely think this one will be interesting. And then finally, UUP, baby. I want to see it towards the downside. Maybe consider shares because those random options in the random account, they're not that good, but maybe if it keeps dying, then maybe they actually have a decent premium associated with it. But the UUP, the dollar, man, it just broke that death cross to the downside, and usually the death cross kind of leads to a bottom, but the last time there was a death cross in 2020, it led to a bunch of, like, I think 4 or 5 months of just huge dollar losses. So I want to keep my eye out for this. And like I'm saying, the yen is strengthening. That should mean the dollar weakens. I mean, we'll see what happens with the Chinese currency too, but this one might be an interesting to watch, especially as we move forward and seeing how the market naturally prices into restrictive or if Powell wants to beat us with a hammer. So those are the main plays. As far as everything else, believe it or not, I didn't do much today. The fact it all came in line, and I was like, I don't know how I feel about this. Again, that blue line I showed you with the housing, I really think Powell did not like today, but I said, well, the market's still kind of holding up. There was still some good signs. So believe it or not, I didn't do any trades in the morning. All I did, I closed out of my NVIDIA. I had like $800-900 profit. Could have made a little more if I held it, but got out of that, and then I closed my Disney middle of the day. Remember, I was down like $1,800 on this one. Came back, I had like a $14 profit. I said, give me my money back. That's fine with me. It was a great start to the year with Disney, but I was done with it. But they are doing that little drama with Nelson Peltz, so it might get a little crazy. But besides that, I just held everything, and now my plan moving forward, I hope it's up here. Is it up here? Yes, they got them all. Okay, perfect. But the ES is almost break even. I plan on selling this, but I'm going to ride it out with everything. And my plan was sell out the ES and then hold the NQ. I'm getting clapped on this one now, but I am very confident in it because it's either, Powell or the bonds will be right. We're going to see, but now we're already positive on our bonds. And then it's not up here, but one thing that balanced it out, it's kind of a surpriser. We still have the yen now, and he's starting to do his work again. So overall, the account has still been going up. I know this number looks scary, but don't forget, I was down more on this ZN before. So I like my downside on the NASDAQ. I'm going to be holding it, and really it's going to be a game now of dropping this one off at profit, but I may want to try to squeeze this a little bit, but I don't want to move too soon till we get more clarity and kind of let the market and earnings and then let everything do its thing until Powell. But still in that, my Meta short absolutely smashing me. My Ubers came back. I remember I was down a couple hundred or even 1,000 on that one, so still riding that one out. And then as far as everything else, like I still got to work on the BA and Lockheed. Those both suck and are hurting me a little bit. My Netflix shares, you remember the 5 shares, only down $14. Again, play it small. I'm still riding that one out. I don't know how you feel about the patience or not, but still liking that one. And then really, we got Qualcomm working against us, got out of the Disney, and then really just going to ride whatever else, play the futures, and I think the bonds and yen should take us home, and then we'll even have a little upside with ES, and then where's my child support? My Tesla, yeah, the Tesla need to come back too, so still clapped on that one. So we'll see what happens, but overall, it's looking pretty. I'm liking all of this. I'm liking the macro, and I think we're going to get a very fascinating rest of the month, quarter, and year. So I hope you're ready. But that is your watch list, ladies and gentlemen. Make sure hydrate, healthy, ready to go. Make sure post your watch list. Make sure we see you there in the morning. I need the armor on. I need the helmet shining. I need you to remember, baby, do not despise the days of small beginnings. I'm telling you, you want to make progress right now, you got to get humble about the market. Don't worry about what it looks like, what it's going to be, this and that. You got to go big. You got to be right. No. Be humble. Go small. Do what you need to do to take care of your financial future. That starts with paying yourself first. But I'm telling you, man, I don't want to be all high and mighty because tomorrow I might fall down on I think I just butchered it, but I'm telling you, be humble about it. Let's ride it through. Nobody knows anything. You didn't miss the bottom. Don't get FOMO'd, but at the end of the day, don't get too hyped up on whatever you see here because things can change. And really, there's a lot we learned from last year, and don't forget about it. But one thing right now, balance that budget and be humble, and let's take it throughout the rest of the year, baby. But I love you, Chad. Thank you guys for everything, and double thank you if you liked the video and if you subscribe, baby. We love you, and I'm going to see you in the morning, and let's close out the second week of the year, baby. It's game time. Hey, man, I love you. All right,